Hey out there, Sean from Invest to Live. Another Sunday night edition. This is episode 20 of our sneak peek for the week, where we cover some of the big topics for the upcoming week from a global economic perspective. Could be some local perspectives, stocks, financial data, etc. Things that are really interesting. Tonight we have three key topics to cover. Number one, we've got Disney coming down the pipe with some big earnings. Could be some significance in that. We're going to talk a little bit about the eviction moratoriums, what that means for both sides of it. And finally, we're going to talk about inflation data, or the CPI data that's going to be coming out this coming week. Side note, I also have a bit of a sunburn on my face, so I don't know how that's looking on the camera, but it's looking pretty red on mine. So, we'll see how that goes here. Um, where I wanted to start tonight was really in and around this idea of right off the bat, what is this? I guess we're calling it a new eviction moratorium. Essentially, what this is extending. And the reason I say it's a little confusing is when I was listening to this during a press conference, it was first described as an extension of the moratorium and then later described as a new moratorium because the Supreme Court had struck down the original as being unconstitutional. So this is a new one that is good until, as I understand it, October 3rd. Definitely check that. The numbers should be right, but I just want to take a moment to say, always make sure that the dates are right if you're looking to leverage something like that or not. And look, the reason I'm starting with this is pretty simple. It doesn't really matter which side, excuse me, which side of the fence you're on. If you're a renter, obviously you don't want to lose the place you're staying in, and if you're having trouble finding a job, getting the income you need to pay that rent, of course, there's concerns for you on that front. If you own the rental properties and this is your source of income or how you pay the mortgage on those rental properties, this is equally scary because you don't have rent coming in. And the last thing I want to do is politicize this, so I'm not going to. What I'm going to say is both sides need to do themselves a favor and take more than 30 seconds of sound bites and dig in, understand what your rights are on both sides, understand what you have to help you with this. You have to understand what it means for you when it's up. One of the things I keep hearing about is, frankly, well, I'm not paying rent, so I never have to. And the other side saying I'm losing my house because I'm not getting rent. And what I'm saying is, make sure you know the facts of this. If you're on the side where you own the property and you're getting hammered because you're not receiving income, maybe it's worthwhile to give a call to an attorney and see what your rights are here, or certainly at least read the documents and understand if the tenants that aren't paying fit within the moratorium standard. If you're on the rental side of it, there's things you need to do to make sure you're not evicted. In fact, following that CDC order, and so one of the things I was going to call out is really consumerfinance.gov has an entire section here around homeowners and renters. So it is representative of both sides of it. I have no doubt that there are huge and significant emotions and feelings on this. Believe me, I'm being very neutral on this video, but I certainly can feel pain. What I would say is just make sure you know what's going on. Like number one, and I'm reading this right off of their site. If you're a renter, there is free housing support that's out there. HUD does have folks you can call. You can speak to someone, understand what's there. What I wanted to call out, though, is a couple of quick things. This is good to know if you're a renter or someone who's renting a property. So really pay attention here. It's not that much. I'm going to read it, but I would really still suggest you go and check this out. Essentially, as it reads, is to see if you qualify for the moratorium per the CDC protection. So if you can say essentially yes to any one of these things that I list, you theoretically will qualify for this. Of course, you got to go through the process, make sure you actually qualify, make sure the numbers or the metrics you're seeing or hearing here do in fact fit. But just give you some quick ones. From an income perspective, I received a stimulus check, also known as an economic impact payment, in 2020 or 2021. I was not required to report any income to the IRS in 2020. In 2020 or 21, I earned or expect to earn less than $99,000 as an individual or less than $198,000 as a joint tax return filer. You are likely to have earned under this amount if you receive any of the following benefits: SNAP, TANF, SSI, SSDI. If none of the above, theoretically, you do not qualify for a moratorium assistance or protection, I suppose is the right word. Now, on the flip side, that's the income piece. On the financial hardship side, I cannot pay my full rent or make a full housing payment because my household income has gone down substantially. I have been laid off of work. My work hours or wages have been cut. I have extraordinary out of the pocket medical expenses defined as 7.4% of my adjusted gross income. You can see this on your tax returns for the year. Now, I don't care where you stand on this, how you feel politically, where you feel financially, the stress it's bringing in. I get it. What's what's probably making this really tough, I think, for a lot of people is the income side of it, not hard to understand. If you're a part of any of these programs, you probably made less than the amount and you probably will qualify. There are some clear things. I received a stimulus payment. Yes or no, you did or you didn't, right? The financial hardship side of it makes this so murky and hard to understand because define words like income has gone down substantially. Is 5% substantial or is it 90%? Is it 50%? Is it 75 or 25? I mean, who defines that? And this is just the level of frustration I would imagine everyone involved must be having. It's so frustrating. And at the same time, say, I've been laid off from work. Well, does that mean that you're not you're getting unemployment? Are you getting extra benefits? I don't know. Where's the line drawn with that, right? Or even work hours or wages have been cut. Well, what if it was cut by an hour or by a nickel, right? I'm not trying to be funny here. This is like, these are the most serious things for people, their housing, their income, their financial well-being. And we're using words like substantial, using words like cut. I mean, talk about like not clear or extremely difficult to understand. It's so frustrating for everyone. And even in cases where now someone who has medical expenses has to go and figure out what 7.4% of AGI is, again, like when you're worried about a roof over your head or paying for the roof that you own, these are things that are going to be really tough and frankly, really frustrating. The other piece of this as well is for the transmission and the community side of this for approval. I live in a US county with a substantial or high rate of COVID-19 transmission. And it says go and check the CDC tracker. So I did check the CDC tracker because I was really curious to see, like, is this another like fluffy math type of thing where it's impossible to figure out or it's really confusing? I got to be honest, I was actually, excuse me again, completely and totally blown away. Um, According to the CDC tracker, I mean, the entirety of the United States was essentially in that range. Now, there were certainly some small counties here and there, some counties in sort of the Midwest or the Great Plains area. Maybe there are some areas there that weren't going to fit into that, but largely speaking, it was basically all red or yellow or orange, whatever the colors were. So, like, just as an example, in my neck of the woods, there was nothing, no matter where I could possibly go, that wouldn't be extremely high or substantial. So that's my point here. Is like it makes it very hard to manage yourself. When it's so vague, but yet also so obvious in a sense. So just think about that as you're going through this. That this is something brand new. There's something that has to be understood of what's going on here. Now, I don't normally talk about this much stuff on my sneak peeks for the week. But because we have CPI coming out and because we have a lot of big earnings, I think it's really important to talk about this eviction moratorium because we know that the previous one had been struck down by the Supreme Court. So what I would say is make sure you understand the ramifications of this current one, what it means for you in your situation, not anyone else's, it's your situation. Which brings me to my next point related to this. One of the things we heard big time after the big '08 crash were major financial, excuse me, asthma again on the phone call, on the video here. One of the biggest things we heard after the '08 crash was large scale institutional investors coming in and buying up all these properties that had been foreclosed on. And there was some outrage, I would say muted outrage, but whatever the case is. So there's some really big single family rental companies that are publicly traded. They're REITs, but they specialize in single family homes. And a REIT is a real estate investment trust traded like a stock, typically high dividends. Of course, do your own research. What they were doing is they were going down and buying up tons of these properties for really low values, buying them in huge bulk, didn't care about the condition of them. It's a business model, right? That's what they do. What's starting to be seen now, and I'm hearing about this where I invest as well, is the little landlord, property owner who has 1, 2, 3, 4, 5 doors, whatever it is. they're the ones who are likely to get hammered here the most, right? You own two rental properties, you carry mortgages on both. You have your own mortgage or your own place you're paying for. Now you don't have any rent coming in for months at this point on those properties. You're certainly at a risk to lose them, right? That doesn't mean you will, and it doesn't mean there aren't some programs out there to help you. But just like the folks who are in the eviction moratorium, you know, you're going to lose those houses. And what's going to be happening here, and don't quote me, right? But like someone's there and ready to grab it from you, right? Because it's not going to matter. They can, if you have enough capital to back yourself up, what's going to happen is you're going to go in and buy these properties. Sure, keep them empty. Who cares? Or when that person finally has to pay the rent back and can't, they're going to boot them out anyways. And I think there's a certain level of coldness to that approach. It is what it is. And that's one other point I wanted to mention here. When I say don't listen to sound bites, it's not because it personally impacts me whether you do or do not understand an eviction moratorium. What I'm saying is it's not just not paying rent for both sides. If you are currently renting, excuse me, and you're within the moratorium, you do owe that money back. And I don't think people are aware that if you're not able to make those monthly payments, how are you going to pay it back in the end? I don't think anyone's addressing this like at all, bar none. It's not being addressed. And we keep hearing that states have money to support both sides of this. But what we're also hearing is that states aren't actually giving that money out, or that they don't know where the money is or how to get it out efficiently. And so you can feel this tension building, bubbling up, because we've got two sides that appear to be diametrically opposed to each other, right? When the truth is, it's really neither side. One side's in a position where they're like, hey, look, this thing says I don't have to pay my rent. If I fit these reasons, why wouldn't you take it, right? I get it. There's maybe lots of answers as to why you don't believe that's true. Totally get it. On the flip side, the owner of that property is like, look, I'm trying to get help from the government. They are not giving me the money, so I don't know what to do on my side either. Is the best bet to just go bankrupt or file bankruptcy for that? And, at the end of the day, there's going to be winners, and it's probably not either of those parties, right? It's going to be large scale financial institutions jumping in, grabbing those properties, and then they're going to be back on the market with, whatever they can get for rent, and, you're none the wiser. So just be aware of that and be careful. I didn't expect to talk about that topic for this long, but it's extremely important. And there's also repercussions to the financial markets as well, because this means mortgages won't be paid. This means small firms aren't going to be able to keep on employees. This means property management firms are not getting paid. This means taxes are not being paid. It's always like we talk about. It's that supply chain effect where there's lots of links, and where there's a broken link, everything behind it breaks as well. So just start thinking big, not just about one or two doors here, but like, what does this mean at a national level if many, many people are not paying rent, and then in return, many, many people are not paying mortgages, and then are not paying the taxes on those properties? It just keeps bubbling up. And at some point, it has to be addressed. We have to figure this out. And I don't know who that is, frankly, because it seems like we're all over the map on what the solution even looks like, which certainly is frustrating. So the next topic I want to talk about real quick was that we have CPI data coming out this week. So CPI data is the Consumer Price Index. Before going into the data here, I thought it would be helpful to at least give an idea of what Consumer Price Index means. So I'm going to read this really basically from Wikipedia here. Consumer Price Index measures changes in the price level of a weighted average market basket of consumer goods and services purchased by households. A CPI is a statistical estimate constructed using the prices of a sample of representative items whose prices are collected periodically. I'm going to put that in really simple terms. What this basically means is we're going out and we're looking at the price of all the different things you might buy or use. We're trying to understand if we grab a couple different items in a shopping cart, price of gas, as we heard during press conference recently, price of hot dogs, home prices, sneakers, I don't know, name it, right? Any other service or product. We're trying to understand over a period of time, are they going up or are they going down? And essentially what this means is the same $1 bill that you have in your pocket might be buying less gas than it has in the past, or not as much sneaker as it has in the past, or whatever the case is. So this is a big deal because there's a lot going on at a government level right now where there's a battle around this idea of, is inflation for real? Is it transitory? Is it sticking around? Are these price increases going to be around for a long period of time? And this is really really frustrating. And, that's why I say, like, one of the big things this week is going to be a US Bureau of Labor Statistics Consumer Price Index. And it's going to reflect the extent that CPI has increased over the past month. And what also makes it tough is we're comparing it sometimes from like the year before. Well, last year at this time, we were in like a total lockdown. So it's even harder to understand what these numbers really mean when we're comparing it to a time period that was like nothing we've ever seen before. So here's the deal: the consumer price index, and we're going to exclude um, really volatile things like energy pricing and food, is expected to have risen by 4.3% in July compared to the previous year, and that's the key, right? So we know in June it was 4.5%. So we're expecting it to be slightly down from June, which has been the fastest pace in almost 30 years, or just about 30 years now. Um, that's really scary, and it's a lot, and it's significant. So this matters because what it means is our dollars aren't stretching. We're not buying what we once could. In fact, it impacts everything we do. But I want to call out here. It's really important to note that one of the things we talk about a lot on this channel is that inflation affects cash and affects the dollars or any currency for that matter, but it helps with assets. That's why when you're an investor and you own assets, you own stocks, you own real estate, you own perhaps sometimes precious metals, but ironically, I'll only speak to this briefly, but the Fed is talking about maybe tapering. So we're seeing gold and silver starting to fall. So although typically we do want to have a basket of a very diversified holdings from an asset perspective, it's funny timing that I'm talking about this and gold and silver are going down, but bear with me. This is why the idea is that when you own assets, the value or the cost of those assets go up. So if you own them, you get the benefit of the inflation with it. When you hold cash or money in a savings account, etc., that teeny tiny percentage of interest you're getting on it is not matching inflation. And that's what people talk about all the time. Like, you might make 12% per year in a return, but if yearly inflation is 3 or 4%, you're actually only netting 8% return. Really, really, really important for you, not just as an investor, but just as an adult. You need to know these things. It's really important to understand how they work. So that's why that's such a big deal that CPI is coming out. This is something you really, really should be paying attention to. It's got a big impact on how we live, on our country, really on the global economy, frankly, if I'm being honest in the way I look at it. It's not just something to look past and say, well, hey, it is what it is. It's not what it is. You need to pay attention. You need to really build this into your model of how successful your investing is. Do you have the right asset mix? Are you protected from inflation? How do you take advantage of inflation, right? This is what we're talking about. So the last point before I sort of run down who's reporting this week, really big earnings this week, as always. I know you hear me say this every week, but we're going to talk a little bit about Disney. So Disney's reporting this week. And the interesting thing with Disney is we know that Disney Plus, the streaming service, really was huge, right? It went big. They're having movie releases. I just watched, oh my gosh, a Black Widow, right? Is that one thing of Black Widow I just watched the other day? And I was thinking, like, boy, this is definitely cheaper than going to the movies. So that was pretty easy. And then funny enough, Scarlett Johansson's actually in a lawsuit apparently against them because of getting paid for streaming, etc. But it really makes me think, like, boy, this does feel like the future to me in a big way. I'd rather just be able to grab a movie at home than have to go out, see it in the movie theater, which I don't do anyways. So it was kind of a cool experience. And we also know that the theme parks at Disney have been getting just absolutely hammered for a long period of time now. They open, they back capacity again. They're trying to figure out what the right mix is. So the idea is that we know that streaming may have gone down a little bit because it had a huge rise, right? But it's never going to stay that way, as we saw with Netflix. So they're going to have to start to adjust how they make the money, how they turn the levers to drive that EBITDA. But we also know that, like, parks, theoretically, I think a lot of people are hoping would be back to normal or more normal by now. So we're going to see at the earnings time, are we getting hit on the Disney Plus side? Are we seeing growth in the parks? Are they both getting hammered? Are they both doing really well or surprisingly well? We'll find out this week on the Disney front. And the reason why I mentioned Disney particularly is, and I know you hear me say it all the time, Disney is in a lot of the index funds you probably own. So even if you don't own Disney right out, there's a really, really good chance that you probably own it in some other key holding within your portfolio. So again, you got to know what's in there. You got to pay attention to it because it really does matter. So this is where we hit this crossroads of earnings and the current COVID situation. as COVID seems to have become this odd ebb and flow of never-ending information and news and expansion, so it pulls along the earnings of many of these companies, right? We open things up, we shut them back down. We take the masks off, we put them back on. We have to get new news on a regular basis, ascertain how it's going to affect what we're doing, and then literally a week later, we have to shift back to what we were already doing again. So this is really where we're going to have to figure out what's happening with Disney, and then we also should be extrapolating what will news do to affect it further out, 30 days, 60, 90, 120, etc. This is where you're going to start to put a little thought into this process. All that being said, you don't really have to, right? If you're owning it through index funds and using dollar cost averaging and you're buying on a regular basis, typically long-term results in the markets aren't bad. It's not financial advice in any way, just looking back at historic perspective, and historical data does not mean that future data will ever be the same, by the way. But just keep that in mind that, small swings during crazy times in the world do not always indicate whether a company will or will not be good in the future. So again, what I would say is take the time to go into your VTI or your SPY or anyone else that you own and just see, who's in there, what percentage of the portfolio is made up by those stocks, and make sure that you're tracking them and seeing how they're doing. So let me jump into this real quick. I went way longer than I meant to, of course. We're going to talk real quick here about the earnings calendar for the week. So I don't cover everything. I just cover some of the more well-known ones or the ones that are particularly interesting for me. So I'll run through this pretty quick. So on Monday, we have Dish Network, DISH, Tyson Foods, TSN. Those are before the market opens. The Real, REAL, Planet Fitness, PLNT, Smile Direct Club, SDC, AMC, this is going to be huge, are all going to be aftermarket. AMC, of course, I'm always interested in the meme stocks, what they're doing, if their business is actually improving or not, what that could do to the underlying stocks. I'm not playing them, but I still think it's really interesting to see what's happening. On Tuesday, we have Coinbase, COIN, which I'm really, really looking forward to seeing what's happening there, because they're going to be reporting the past quarter when the price of Bitcoin got hammered and all crypto really got hammered. Now going into this call, I looked right before I jumped on, listen to me, this video, right before I jumped on, it was still in around that 43,000 mark, up from the 29, not really just a few weeks ago. So it'd be interesting to see what's happening in Coinbase. ThreadUp, TDUP, Poshmark, POSH, and Chesapeake are going to be after the market close. That's on Tuesday. On Wednesday, we have Bumble, BMBL, Vroom, VRM, eBay, EBAY, Sonos, SONO, Clover Health, CLOV, Hims and Hers Health, which is HIMS. Hims is one of those ones where when you're watching videos on YouTube, I felt like for a 6-month period, I never, ever stopped seeing advertisements constantly. And it was on oh gosh, what's the channel? Bloomberg and CNBC was just pounded with Hims. So it'd be interesting to see what's actually happening there. I have no idea if that's a business model that's working, if the company's doing well or not. We also Duolingo will be DUOL will be after the market close as well. I use Duolingo to learn and practice my Spanish from years ago that I forgot. So, be curious to see how they're doing. Thursday, we have GoodRx Holdings, GDRX, Palantir, PLTR. Full disclosure, I own Palantir. I'm a huge fan of Palantir. I'm absolutely not recommending it at all, but I work full-time in the AI, machine learning, data science space. So I am very, very deep in this space. I understand it. I see the demand on a regular basis. So I'm really interested in Palantir. What makes Palantir's business model slightly different than many people who are out there, and again, I'm being very clear, it's not financial advice. I'm not giving an analysis of it. You don't know how I trade or own things. But with Palantir in particular, their base is so heavy on the government and federal side that they tend to be affected by things in different ways than other companies in the same space who are heavy in the commercial side of business. Now, Palantir is trying to move more into that commercial sector, but for now, it's very heavy in the government side. So I'm really looking forward to seeing what the earnings are going to be for Palantir, and that's going to be before the market opens. Now, DoorDash, DASH, Disney, as we discussed, DIS, Rocket Companies, RKT, SoFi, SOFI, Airbnb, ABNB, are all after the market close. There's a whole bunch here, right? DoorDash, I have feelings about what I expect here, but I'm not sure yet. SoFi seems to be some interesting things going on there. Airbnb, again, these are sort of like signals or indicators of we're getting back to a recovery or we're not. I think we're going to be some interesting information here. And then on Friday, the only thing I'm really looking at here is 23andMe, which is me before the market opens. So I went a lot longer as I as I always do on these videos than I meant to. But the good news is there's a lot going on, and I think, or I hope, if you are watching these consistently, and I wish more people were, but that's okay. If you are watching these consistently, hopefully you're seeing that, like, as you're hearing the stuff on a regular basis, you're taking it in, you're learning a little bit every week, you're thinking about how it applies to your portfolio or your financial situation. And you start to learn and grow and get more curious about what's within your portfolios, the exposure and risk you have. If you haven't yet, I hope you've listened to some analyst calls. But otherwise, with that being said, I hope you have a great week. I hope you get a chance to check out some of these earnings. And frankly, I hope, regardless of where you stand on these eviction moratoriums, I hope things are going well for you and that financially you're doing okay. I really hope you are. And we'll see what happens to everything else. So, with that being said, have a great week. Good luck out there. Be safe and take it easy. Thanks.